I want to bring on someone that has so much hopium that will make me port my money back on chain heavily again. So I'm not on chain poor and I'll gamble all the time.
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
What's up, everyone? Welcome back again to the More Than Speculation pod. It's been a while since we have a guest, I would say. It's been a fairly slow market, just to be candid, but I'm happy to have you here, Felix. We typically just yap for the first couple of minutes because whenever it's live, people take time to actually hop on the pod to actually look at it. So I guess we can start by, before we even enter into who you are, who you represent, what we want to talk about in this pod, we can start with something very casual and a bit off topic, but very high level, difficult question. What is your overall take on the state of DeFi itself?
Yeah, I think we built the infrastructure. It's kind of working, the systems we figured out over the last 8 years or so, or maybe 5 years of DeFi, how to build certain systems, the basic ones like lending, swapping, yield trading, tranching, and we're heading to a point where now there's advanced risk management and some further tools coming out, but kind of the first step is done. But we sort of also saw that this circular economy within DeFi, where everything's just based around token yields from printed through liquidity mining, doesn't really work anymore, and it's sort of a little bit over. And the only area where there's still growth for DeFi is kind of bringing traditional yields and traditional assets on chain. And so, I'm very excited for being in that stage, because it also means we can use this infra that we built for the DeFi, crypto native ecosystem, and apply it to these sort of traditional assets that are slowly coming on chain, which kind of take more time. And, hopefully it's going to be more useful then to them as well, and not just kind of stay in this circular economy. And then, yeah, so obviously right now this all still takes a little bit of time, but I'm pretty excited for it.
Got it. Well, let's take a quick step back before we dive into what we're going to talk about. Lambro, you have been, I think, a bit more bearish overall in DeFi these days. Has your feelings changed in the past quarters or so, or what's your mood overall?
Still pretty bearish. I think for me personally, right now the risk reward for DeFi is not justified based on the hacks. If you're tokenizing it for traditional yield, I'm like why don't I just? I'm lucky. I'm based in a country where I can technically invest in any instrument. So for me, it's not an edge, right? So for me, it's the return is not higher than traditional stuff. I don't need to pay capital gain tax. I don't want to do illegal shit. So I don't really need to. I don't really need DeFi right now. I'm here to do heavy stuff. But I think it's overall bullish long term still, right? Because eventually the road has to be mapped out that way. Eventually efficiency regulation is going to come in. We're just in that awkward teenager stage, but yeah, that's why we're still trying to be early and hear what everyone's building for the infra for the next step to come, right?
Got it. With that out of the way, I think we can sort of start, and maybe Felix, I wanted to start by just introducing you to our audience. If you don't mind describing a bit more about your crypto journey, which firm you're with, and we're excited to basically learn more about what you're building today.
Yeah, awesome. Thanks for having me. I'm Felix. I'm the head of ecosystem at Symbiotic, which we're building collateral market infrastructure, meaning basically infrastructure to use assets on chain as collateral for different purposes. So most notably, it's kind of underwriting use cases. So leveraging the collateral to underwrite certain risks, but also in a new product that we're doing, it's about liquidity for assets. So my personal journey, I've been in the space since 2017, or professionally 2018 probably, and worked a lot in the staking industry about running the infrastructure that actually these decentralized networks run on, which was sort of the first precondition for DeFi to exist. We needed proof of stake to be more efficient and proof of work, especially like programmability wise and just like cost wise for operating these networks. And then, the next step, I think, sort of overlap for me. There was like DeFi summer coming along, and then you have these staking assets that generate a yield, and you can use them as like a base asset in DeFi, right? And that was kind of the liquid staking and then restaking phase a little bit, where I was involved in as well on various fronts. I used to work at a validator company, Chorus One, that got acquired by Bitwise, and then we joined Symbiotic when it came around, as I figured out, there's kind of this convergence of the infrastructure and the DeFi side. Obviously, a lot has happened since then, and been working on this kind of intersection since. We've been really narrowing down on the use cases in terms of how to use collateral. So that's kind of what we're working on right now, and I'm happy to dive more into that and specific products that we're currently building.
Got it. Okay. Just very quickly, for people who might not understand or not the most savvy about DeFi or financial instruments and so on, what are collateral markets? Yeah, in simple terms.
Yeah, so if you currently you have assets on chain, or you want to use them to get more value out of them, right? You don't want to just sit around. You want to maybe earn additional yield. And for a lot of those use cases, you either need to take certain risks, right? So you can leverage them, and then you have the risk to be liquidated or something like this, right? Like normal DeFi lending stuff. But we also basically introduce primitives for you to leverage these assets in different ways. For example, also to underwrite hacks or insurance risks, or you underwrite certain borrowers that create yield on your base of your collateral backing, and then you receive part of that spread back. And so collateral markets are kind of like a catch-all term to sort of signify that you can put down this collateral and apply it on different use cases. Some of them will be built by external parties on the Symbiotic platform, and some of them we're also building ourselves. And then the combination of them makes for a cost or capital efficient way to use your assets, essentially.
Got it. What are the products that I guess people can get their hands dirty on right now, just so that they have a better understanding of what Symbiotic is building these days? I read something about, maybe jumping ahead a bit, that you recently launched a liquidity solutions for tokenized RWA, but it seems that, as you just described, collateral markets itself encompass a much broader, I guess, thesis, right? So I'm assuming that that's just one of it, but is it, I guess, just for context purposes, some people might be asking, are you building vaults? Is that the same thing as collateral markets, or is it Impruvia? How would you define that?
Yeah, vaults are definitely a key part of this, where the vault is sort of the infrastructure that is used to sort of decide on this collateral exposure, in a way, where each vault can sort of subscribe to certain use cases and pledge its collateral to it or not, and then kind of takes on that risk profile, right? So we are a vault-based solution. Our latest product that probably we're going to hopefully talk a little bit about today is Liquid Lane, where we actually will additionally open vaults for USDC now. So previously we had mostly Bitcoin and ETH collateral, and sort of you'd be able to underwrite borrowers that would borrow funds through that, or insurance protocols like Nexus Mutual that's working with us. Now with the USDC vaults, we're also bringing in new ways to utilize the USD in the RWA space, where you can essentially have these vaults. They take USDC, and USDC is basically used to acquire these RWAs at a discount if people want to exit them. So end users that hold these RWAs want to exit them early. Many of these RWAs have long redemption windows. So sometimes it takes a week, 30 days, 90 days for you to natively get the asset back from the issuer. But obviously you might want to exit these positions earlier. So what we enable is we basically enable users to tap into this market on one side by
Yep.
providing the USDC for exits, and on the other side, like, you know, earning the yield from providing this USDC for people that want to exit early.
Yeah, for the discount and the spread.
Yeah. And on the other side, we basically allow people that want to do this, like RFQ, participate in this OTC market in a way, like acquire these RWAs and then redeem them with the issuer. We give them a way to attract third-party liquidity, right? So normally, if you're a market maker, you might do it from your own book, or you might borrow money elsewhere to do this kind of strategy. But now we're sort of automating this entire flow within our smart contracts, within the collateral market framework, to enable you to like sort of get that capital from elsewhere and share the spread of it.
Yep.
Do you mind me asking? So would you say like this whole system is allow you to list various collateral and to be able to borrow to special asset as like a unique selling point compared to other traditional typical lending markets?
Yeah, it's to traditional lending markets. Normally, we also have, so it's a little bit broader. It's in a way also like infra. We can access the lending markets as well. For example, from Symbiotic Infra, you can have these adapters. So once in the collateral market framework, you put the collateral once, and then you sort of use these adapters. You can go into external DeFi, such as Morpho, but you can also like use our internal kind of use cases. And some of them are liquidity use cases, meaning the funds actually have to leave the vault. And then normally they're like kind of constrained in what they exactly can do. So in this RWA case, the funds can only go and participate in this auction, or they can redeem with the issuer. And then there's other use cases where you're underwriting certain risks, so the assets will be locked, your collateral will be locked for a certain amount of time, so that because these use cases might need guarantees. So I don't know, like if you're underwriting an insurance protocol, you need like a month of lockup, because if insurance claims come in, there might be some time needed to evaluate them, and we want these like guarantees to hold. So that's kind of used to be called staking. Right nowadays, we just call it locking, and kind of giving like these guarantees for financial use case, mostly underwriting risks.
Understood. So what kind of market are you guys targeting? Like obviously from mechanics point of view, it makes a lot of sense, right? But like essentially you're finding mispriced risks and reward for people to provide that ARB in whatever way they think, right? Like if from mispricing risk or pricing time, some sort of thing. So like what kind of active position you guys are going direct towards this direction? Because like I think the positioning is right, but like how you go about it has always been the problem, right? If you go too fast, risk might be a problem. If you go too slow, the yield is not attractive for like a degenerate like me, kind of thing.
Yeah, right. That's actually a very good point. I mean, we've taken like sort of this approach that we're this platform, and people we give you the tools to build these products. That also means we have the curator model. So you do have people launching vaults and that then manage these risk exposures, and maybe they can take on more degen strategies. In this case, like with the Liquid Lane product, what it would mean is like you can kind of subscribe to a bunch of RWA assets that you're fine with having exposure to, and then like you're essentially help service redemptions for all these different RWAs, and you have higher utilization and higher yield through that. But you stand the risk that one of those RWAs might experience some NAV impairment or something. And that's kind of the curator role here. So we're building sort of the platform and the infrastructure, and then you build like your vault yield strategy, and the user selects, like the depositor selects the strategies that they're most comfortable with, risk profile wise, or the curator they do, and then that's
right. So just a quick follow up. Let's so we do curate markets. So let's assume that you're talking to like a curator. What is and please correct me, but like, what is the difference between, I guess, maybe other existing like solutions? Is it that one collateral, such as the USDC for Liquid Lane, you mentioned like one collateral can now provide liquidity to multiple markets? Is that sort of the thesis and why it's called collateral markets, or is there something that I misunderstood there?
Yeah, I'd say that. Yeah, it's sort of trying to have some unique yield sources from our side or from products that we built, plus the access to the existing DeFi ecosystem. And the combination of that makes like for more attractive strategies, and sort of because we have unique ones, like others can't access them, or I guess they could also build these adapters and it becomes composable.
I see.
Yeah.
Got it. And is like Liquid Lane right now? Is it live? Can normal DeFi users become one of the LPs, one of the depositors? Or like, yeah, what's the state of it?
Yeah, so I guess we're actually live streaming this. Is literally like launching this kind of these weeks. We have like some of the first vaults deployed. And you sort of have these like, it's like probably a 2-3-sided market where you have the issuer side as well. But the vaults are being deployed. They're working with the curators right now. We're working with the curators right now to set up their initial vaults, see the liquidity, set these initial parameters, and then they're going to be open for deposits very soon for LPs. We're doing also like kind of GTM with some of the curators, and then the other side of the market is with the issuers. Like, where do you integrate sort of this flow so users that want to exit early actually have access to these bids from Liquid Lane. So for example, you might have an early redemption button on your UI, and it routes through Liquid Lane, like, and these kind of integrations we're also working on right now. So should be within the next few weeks that the whole system is running, and then you can see like live yields and decide where to deposit.
Got it. Sorry, Lambro, if I'm like taking the convoy. Just have like one quick follow up on this. I'm intrigued by it. Like, so, like, I guess, how do you foresee your solution provides better liquidity for like tokenized asset itself, right? Because the part that I don't fully understand. I mean, yes, Liquid Lane provides liquidity for RWA people that wants to do like earlier redemption, right? But there has also been, I guess, like similar efforts, although constructed differently, done in the past. So I just wanted to like understand how you guys are like, I guess, like what's the unique North Star that Symbiotic is like trying to position itself now, right? Is it like to become the marketplace where the vaults are the assets inside the vaults, the collateral markets can be used for like multiple markets, so it's more capital efficient, or like what's the selling point there?
Yeah, pretty much that. Like the core idea is that, let's say you have USDC and you want to deploy it, and we want to be basically the place where you get the cheapest cost of capital if you look for USDC to underwrite your certain risk, and or to provide liquidity to your use case. And how we do that, like in this specific example of Liquid Lane, is by essentially combining these early redemption flows with exposure to Morpho or other like lending markets while you're not actively redeeming. So the curators can decide to allocate funds to Morpho from these USDC vaults, and they will earn the base yield. But once like an RWA, like a user wants to redeem early, they can kind of give bids and say like, okay, we can acquire it at this price. And then if they're fulfilled, you kind of withdrawing from Morpho, the end user gets their USDC. You kind of hold this RWA until redemption, redeem it, and the spread creates the yield for the vault. And so because we were able to sort of hold these assets in Morpho, and you can kind of, as a curator, define all these things yourself, we should be capital efficient way of doing this and versus like, let's say you have an idle liquidity buffer where you just have USDC holding there or and you redeem assets with that, but you're kind of missing out on this base yield basically. Like you can do it by hand as well, but in our case, the idea is that it's like a smart contract system. It's not some market maker that you also have to pay a lot. If you do like a one-on-one deal with someone as an RWA issuer, you get one quote, right? In our system, the idea is that you get like quotes from different vault curators, market makers, and get the best price. That's kind of the other side of the like supply and demand side type thing.
Got it. Got it. Yeah. I mean, like, I guess, Lambro, do you have any other thoughts here? As I mean, like, you're one of the most DeFi power users. You like try pretty much every product. You got rugged or you got round tripped and so on. So, like, what's yeah? What's your do you have any other like follow up question here as a power user?
What's I haven't clicked into it. Is it live yet, by the way?
Not the liquid lane, right? But just the
Not the we're gonna launch these new vaults. Gonna be like visible on the web page too soon, like app.symbiotic.fi. Currently, we have like other vaults live, mostly around like ETH and Bitcoin use cases.
Okay.
Yeah.
What's the yield like, by the way?
Yeah. So
what's the yield gonna be like? Yeah.
Yeah. It's gonna depend a little bit on the strategies of the curators, right? Like, so which RWAs they're gonna be willing to redeem for, essentially, or be utilized for the liquidity. But it's essentially like the Morpho base rate plus some something topping that up, probably like
the Morpho base
200
rate
to
plus
400,
okay,
200 to 400 basis points above the Morpho rate, which would be like 6 to 8%.
6 to 8%. Yeah.
Or, if it like really takes off and the system is used by a lot of issuers, more RWAs come on chain too, right? Like right now we're at 30 billion or so. There isn't like that much volume yet if you think about like how big the market for RWA is in the TradFi.
Yeah.
And then if you have like a lot of users redeeming, let's say Robinhood has an RWA tab or whatever, and people exit there, then of course this utilization for these vaults might be much higher and you can generate much higher yields. But then also you might have price competition bringing down the yields. But so the idea is it'll be some significant basis points above the base rate without taking on too much additional risk, since you sort of only have this short duration exposure to a set of whitelisted RWAs that we work with the issuers with. So these are quite some different issuers like Centrifuge, like Midas, like Open Eden. These are like TradFi assets that have a relatively low risk, depending on with the issuer and the fund manager.
Yeah, I guess if tokenized stocks become more popular and dominated, it'll be open up and a lot of market for you guys eventually. It's a good position to be for future use case, I think.
Yeah, definitely. Like, so tokenized stocks, there might also be like other ways to trade them. Maybe they don't have like the same liquidity constraints sometimes, because like stock you can kind of sell relatively easy. Some of these RWA funds, they're quite illiquid otherwise, right? So the problem is really you have to go to issuer and maybe wait all this time, or you randomly find someone that wants to buy it, and not randomly, but you need to kind of search for them, right? So our idea is that we kind of build a market for this. You'd have to like you probably have to call your investment bank or whatever. Normally you call like market maker, hey, can you help me?
So, all right, I think this is quite a clear product, and it's a building for the better and longer term of DeFi. What about now then? Like are there other trends in DeFi that you find interesting other than like let's move away from lending a little bit? Because like I'm super bare right now, so like I need someone to like help me back up.
Yeah, it's a good question. I think now if I don't have an answer, it would be bad, right? No, like I think we still have also, I guess the big innovation in this last cycle in a way, or where it really takes off, was like perps and prediction markets and sort of these different forms of trading markets that really show and make it into the mainstream now as well. So like now with the World Cup, right? Like you could really see like the ads are there. These are in the end like kind of crypto platforms more or less. Some of them more, some of them less. But it's kind of cool to see that this infrastructure actually is better and useful on that sort of scale, and it's not just like us trading there. And I think Hyperliquid as well, right? You definitely saw significant volume on Hyperliquid, like competing with traditional derivatives exchanges, and becoming more and more system relevant, which is good.
Yeah, I feel like because of risk, people are willing to take bets that have higher swings. Like
Wait,
I'm
wait,
okay to
Lambro.
trade on perks. If that makes
I
sense. 'Cause
actually
I
wanted
don't
to
wanna-
ask you.
Mm.
Go on, go on.
Go on then.
No, like you were like saying that like risk is bad, so it's better. So for some folks like you, you'd rather take on excessive risk and do perps instead
Yeah,
of
yeah.
like lending for some. Yeah, my question for you is that, like, at what hurdle rate would you consider? Hey, at least my capital that I'm not using for trading, I want to park it in DeFi, right? Or maybe just to like expand on my question like a little bit more. I think we're starting to see like some of the qualified custodians like Anchorage, like Kraken, and so on. Like they're like starting to be able to like tap into DeFi, right? Would it make somebody like you, even though you're like a crypto native power user, blah blah, like are you going to be more comfortable? Let's say if a protocol is a little bit more CDFI, but they're like working with like these like QCs, and then you're let's say like hypothetically you're lending against JP Morgan money market fund for 6.5%, JSTXX for 7 point, or like is that interesting enough for you, or you feel like, oh, because I have access to like similar dollar range, I want to get at least 9% for dollar exposure on chain, like otherwise I'm just gonna go to the bank or something like that. Yeah.
So for me, right, like this is unreasonable, okay, but like I wouldn't mind putting in Aave for 4% or 5% ish, given that I know I can pull out anytime in the market, okay? Because like if I have something idle, I might as well do that. Secondly, is my off ramp costs around like what 5 bips or 7 bips ish, depending on the rate. So like for me to on ramp again to do yield farming, I need to make sure it covers like 1% of my cost basically. Secondly, is that if I can put in, let's say, lighter LP or something like that for 20%, I'd rather put 100k there than put 300k for 8% yield that I have a bit of lockup.
Yep.
And or I can just put like go to Pendo, find a PT that won't rock me that much, and drop like because my capital size is I have so much options, right? I don't need to park some there for a hurdle rate. So like I think that's like because I have so much option, I don't really need it. And then for me to on ramp money just to yield farm is annoying for me as well. Like so that's why the biggest part is that. But whereas like alright, like so I've been trenching a lot on Robinhood. I've been playing prediction market. I've been playing like it's like sure, bro. Like I throw in like 50k, like something like that. Sure, but like if I have to do something meaningful, like I probably need to put at least a few 100k to yield farm something for 8% to first worth my effort. Then I need to check the new contract. Then I have no hope here in potential upside. You know what I mean? Like it's not like there's gonna be liquid airdrop or stuff like that, right? Then I'm like, all right, fuck it. Let me just put it in a bank. So like I'm not even gonna like, bro. I'm putting in banks for fixed deposits or bonds for like 6 to 8%. Then they give me like a new client new client bonus of like 1 to 2% realized a year. Then they give me some like buy one get one free Michelin star coupon for my credit card and shit like that. I'm like, all right, I'm happy. My girl is happy. I don't feel like I'm an on-chain degenerate anymore. Like I might as well do that for like what realize 10%, assuming that I'll use that coupon for food and shit like that, right? So it's like I can't be bothered anymore. Like
no, this is very good. I think this is like a very good context for even a lot of like the DeFi builders out there, because weirdly, right, like a lot of the tokenized products are US based, but the buyers are not really US individuals, because like a lot of these people can just access those products from their like 401k accounts, right? Like so it's more of like that's why I was like asking you, for like dollar, for like USD rate for certain people in like certain countries, like what makes sense and like what not, what's the effort. So no, thanks for that. That's very interesting. Yeah.
The other thing is like, I wouldn't mind using my SMPs as collateral to perk trade or earn yield, but like I don't want to sell the stuff in my stock account, then go on chain, buy some illiquid stock shit, and then to do like minimal DeFi stuff of it. That's also like a hurdle, right? Like first is not enough yield. Secondly, I have to sell that place and hold this. And then like the hack is like, at this point you just can't be bothered. You know what I mean? Like
all these basically. I'm trying to wrap it a bit. I think what you're trying to say is that like in my view, like eventually when more fintech companies like Robinhood and so on, like when they can do more than just listing earned product and sending it to like Morpho, like when they can eventually, let's say, maybe list more tokenized stocks and do stuff like that. I think only when that happens, so that the habit of people, because like now you like you would have to sell your stock and then go on chain, right? But the Gen Alphas, they might be buying their Micron stock for the first time through Hyperliquid. So they don't even have that in the first place. Or eventually, when these fintech players know that the back office will save 30 bips if they do tokenized stocks instead of the normal one, then they will start to onboard them. Then now you can have tokenized S&P. You don't have to sell it, borrow it as collateral, maybe put it into liquid lane or something like that. Like now there's like more things for you to actually do. But yeah, no, sorry for like hijacking that. Felix, do you have any takes?
No, I think I totally agree. That's sort of the trajectory, right? But it kind of takes some time to move to the new system. And I do think we're somewhat crossing the chasm over time. You have these fintechs obviously launching like products and more actual liquidity there, like Robinhood Chain. I mean, we have like pilots for a long time, but I think the new financial system and building a new financial system just takes more years than maybe it'll take like a decade, 2 decades in total, right? I guess a lot of people that entered crypto early were like, okay, we're making this new financial system. 2 years in, we're going to be done, or something. Like you come in with like an expectation that it's going to be so disruptive that it happens fast. It does happen fast, but I guess still is like a multi-year thing. And we're probably like, some second inning or something at least, But yeah, the end state, I guess, is that everything's on chain by natively and then composable. Currently, we're not even having the composability figured out, right, across chains, across protocols. So there's like all these things that will, like, I guess, naturally evolve over time.
Cool.
Yeah.
Cool.
Awkward stage for DeFi. All right. Any question for us, Felix?
Yeah, good question. Who?
If not, I have a question
for
you to end.
Who would you like to have as a guest on here? Like, what's the goal for the next episodes, or what topics do you want to discuss? Or
you mean like a dream guest or what? Oh, go on.
Yeah, dream guest.
Okay,
dream guest or dream topic.
Put aside all the the clickbait growth bullshit that I want to get like whoever come on, right? Like, I want to bring on someone that has so much hopium that will make me port my money back on chain heavily again, so I'm not on chain poor and I'll gamble all the time. Like, I need someone with high energy to bring me believe in crypto again. Like I felt so alive doing cash cat and all that stuff, but like I've lost my energy again for the past 2 days. Like I just
this guy.
I'm like a drug addict. I had a recent.
He was like, please bring the meme market back, please.
Yeah.
Please take me back to 2024.
It's so depressing right now, right? Like, in crypto, like, you just need someone that truly believes in something. But like Cobie would be good because like bro, I don't even know why. Like after the big exit, like why would he put himself through all this shit just to do the trading app again? Like he must have something in his mind that he's so ready to do it that he. Yeah, I don't know. Like I want to pick like. Even though if it's not public or whatever, like I just want to know like what do he thinks the future of direction of trading is, right? Because like for me, it's like, social trading only here's my 2 cents in trading, right? Social trading only works as a multiplier because an asset is going up and as in bull market it's going up. So the social features is a multiplier to get more people to follow something that would go up anyways, all right? And then AI trading is bullshit because like the cost of token will be cost more than trading fee, and that's why it will be like a high premium subscription model that people would just pay monthly to buy, like just like the research report but become interactive from back in the days. So that I don't think that will work as well. And then the other bit is just like it's just go to market strategy, right? Like user acquisition. If they do well, they do well kind of thing. Because I don't think you can reinvent the trading anymore or the UI anymore from there. So like I'm just like I really feel like we have maximized product-wise what we can do. We just need time and user behavior to change because of like the market. Just like AI stocks have bring on board so many new people that trade stuff on whatever. Not because of the product, but because of the actual seasonal
price action, basically. Yeah.
But I don't know, like I'm just depressed over the market. Like the reason why we still keep this going is because I'm lazy to check out shit now, and I want to bring on guests to show me to look or do things.
This is like his therapy session, man. Okay, but I don't know. I mean, that's the crazy thing, right? It's such a maybe I've never seen this person in any pod. I think maybe if we dig from like 7 years ago, he had made appearances, but I really want to know what the main founder of Tether is thinking these days. Giancarlo, right? I feel like he's not anywhere, but like that's really the one. Maybe because like I run a DeFi fund, so I'm a nerd on like DeFi, stablecoin, RW, and so on. But I feel like that is like they're the obvious strongest player in the space that kind of hard to tell sort of like what's their next move and so on, because I mean like RW and like all of these are basically like 30 to 50 bips savings for the back office. There's going to be regional players that is able to like capitalize on it, people in certain jurisdiction, whether in Latin America, in Asia, and so on, that knows, let's say, how to sell these tokenized products in a semi-compliant way will actually get a lot of cheap capital that wants exposure into these, right? That's why now a lot of people are trying to do like the Morpho model and finding a fintech as a distribution layer. Just hope that like people are not repeating the Luna mistake from back then. There was so many fintech companies that say, "I'll give you 8%," and they just put it to like Anchor Protocol for 20%, and then they take the spread, right? And then we all know how that ends. But I've sort of like thinking, yeah, it's really all about stablecoin and that Gabe, and I'm really curious about his take. Yeah. Felix, we end this session always with one question that we ask like every guest. I will throw it to you, Lambro.
What do you think is required to make it in crypto?
Yeah, I think you need patience, actually, you know. I guess one of the sayings is that, right, the fastest way to become poor is to try to get rich quick. And I think, you know, a lot of people that were in crypto, like that made it, they actually do it over like multiple cycles. And, you know, like a lot of us that have been in it probably know that as well, that, you know, right. you have these losses that you look back on, like in hindsight, it becomes very clear. Probably you're too greedy or like too short-term oriented or something. So probably that would be my advice, to like stick with it. Yeah, build something, you know, build for the long term, build something that makes sense on a like longer time horizon, and stick with it and see it through to the end, and then GG.
GG. All right.
Let's do it.
With that said, is there any final words that you want to say for the listeners to like check out the products and so on? Yeah, like what should they be like looking at? Yeah.
Right, sure. Yeah, check out symbiotic.fi. Liquid Lane will probably be linked there. Yeah, let us know what you think. If you want to build something on Symbiotic Primitives, Collateral Markets, yeah, hit us up. Try and bring Cobie on here. And yeah, that's it.
Cool, man.
All right.
Awesome. Well, thank you for your time, Felix. And everybody, we'll catch you next week. Cheers.
All right.
Thank you, guys.
Cheers.